Morning, and thank you for being here for the monthly update of the Hedge Investment Credit Fund. The month of October was quite negative for us. We're down around 2.5%. The vast majority of the losses derive from short position, especially on the macro book. The main driver for losses was our bearish positioning on China. As you know, China is a structural short for us at the moment. We think the housing bubble is only at the beginning in terms of deflation of it, and we think housing is very important as an economic sector, and is also very important as an asset for the Chinese population. So it will have a severe and diffuse ripple through effect, both socially and politically, on top of the economic side. So we lost money on our position, the Chinese yuan, which is short versus the dollar, on which we are quite constructive given the Fed policy. And then we short on our credit spread negative position on HSBC subordinated and Standard Chartered subordinated credit, which we think are incredibly exposed to China, and they will have to reprice eventually. We also have position on as put option on the Hang Seng, as we think the equity route is not over yet, and we see plenty of regulation incoming in the future. Away from that, the rest of the book was quite flat. On the long short, we had a few up and downs, names like Monte dei Paschi, which we exited before the collapse in talks, Oi Brazil and Dish, on which we remain quite constructive. The only notable driver was the event book. We lost money on Pinterest after the talks with PayPal didn't progress. We really like Pinterest. We think it's a stock that could easily double here. They've been approached by Microsoft before. They'll be approached again in the future by one of the big giants. Most of the cross-border M&A is off the picture, so we think it'll be within US kind of transaction. And I think, Pinterest is a business model which has got a lot to say, a lot to play in the kind of post-Facebook kind of environment we live in. Structurally, we remain very negative on China, although we think the slowdown may be slow there to react and to materialize. We also quite bullish on COVID and reopening trades, and we're positioned around that. Obviously, Pfizer came up with a pill. We talk about it for a long time. We think vaccines are very, very, very effective, very successful. We think now we're going to see this new bunch of innovation like drugs, pills to treat the effect of COVID even before or without vaccination. And we think those will be very, very positive. So we exclude most of the lockdowns, which means we're going to see more inflation, more activity, more opening. The other big driver, big item in the market we're focused on is obviously the rates and inflation. We think inflation is structural. We think there's a lot of inflation coming from ESG, which is here to stay for the foreseeable future. And we're positioned via put option on Bund and bull upside on the dollar. Thank you.